Is the U.S. launching a cryptocurrency that will make the U.S. dollar obsolete? Are you taxed on a brokerage account when you withdraw money? And are Disney Timeshares a good idea? Let's find out. Welcome back to the Personal Finance Club show. Hey, Jen.
Jeremy, what's tea?
Did you know that yesterday was April 15th, which is tax day, which means your taxes are due?
Ooh, did y'all do your taxes?
Did you do your taxes, Jen?
I did my taxes ahead of time. A long time ago because for S Corps they're due on the 15th, and I just did them both at the same time. March 15th, sorry.
Nice.
Yeah.
So I have a question. I think a lot of people really worry about being late, but let's say you're getting a refund, for example, of $200, for example, and you file your taxes like 6 months late. You don't do the extension. You just are totally tardy. Do you know how much the penalty is if you file your taxes late? It's nothing. You only owe a penalty if you owe money. If they owe you money, there's nothing to penalize you on it. So they actually don't. I feel like it's a little bit almost like high school. You think if you're late, you just get penalty no matter what, but you don't. It's only a penalty if there's tax owed. But the flip side of that's also true, which is if you file an extension, the extension is only on the filing date, but there's no extension on the tax payment date. And so while you do get to file an extension on the actual filing of the paperwork, you still have to pay any tax due before the 15th. And I always file an extension. You're very lucky that you have a situation where you don't have late, like coming in tax documents. But I have some tax documents I don't get till like August sometimes, which is so annoying to me. And I want to get myself out of those situations. But yeah, I always have to file an extension and then pay some amount of money, by yesterday.
It's not your fault.
Yeah, of course it's not my fault. It's everyone else's fault.
Of course it's not your fault.
Yeah.
One day we'll do like a Personal Finance Club show tell all, because I have such a sordid past with like taxes that
one day.
No, not I can't. I don't even know. Honestly, we decided that we're gonna talk about this like 5 seconds ago. But like I've had waited a while to pay my taxes and I owed, and so it was like interest on what I owed. It was a mess. I couldn't even tell you. Like, actually, they're pretty good about telling you this is for this tax year, but like, it was a messy situation. So now I'm like very on top of it because I am so scared about that happening ever again.
We've all had. I've had stuff like that happen this year. Like I'm kind of primarily responsible for paying the property taxes on our house, and I missed this is like so embarrassing. I don't know if I mentioned this yet, but I missed the deadline not once but twice, and I paid like $300 in late fees or something like that.
Yeah.
And it wasn't like I was letting it go for years and years and years, and I was just scared. I just like literally was like a few weeks later or whatever. But there's definitely times in my 20s too where I was just head in the sand, afraid to look at things, let it pile up. I think we've kind of all felt that at some point. I think that's probably why we still have the dream where you're in high school or college and you realize on the day of the exam that you didn't go to any of the classes or whatever.
Right.
I think we all still have that fear baked into us to some degree.
Yeah, it's one day everybody's going to realize how comical it is that I co-host a Personal Finance Club show.
No, we're not about being like this, like holier than thou. We do it right, you do it wrong. This is about being relatable, and so it's perfect.
I know, but it's just funny because I'm learning. Here's the thing I'll say. I'm like just sometimes a podcast listener because I'm taking my little notes. I'm using this information. Like I'm getting so much from working here.
We're all on a journey. That's great. We're all on a journey. I mean, I'm still paying my stupid property taxes. Like we're all figuring it out.
Yes. Okay.
But anyway, on that note, let's go on the journey.
Let's go on the journey. Let's get into hot topics.
What is today's hot topic, Jennifer?
Okay, not my government
full
name.
Government. Full of government.
Know. They don't need to know that about me.
If anyone figures that out, is that your password to all your accounts too?
Yeah, like so hard to find out my full name. Okay, today's hot topic headline reads: Washington just confirmed plans to replace the U.S. dollar with a brand new digital version. Version. Is there any validity to this?
All right. So first of all, I have to get this out of the way. I hate this post. This post is like clickbait trash.
Why?
And well, just like the poster itself, it's literally created by AI. It's just like slide after slide of like fear tactics. You're going to
Mm-hmm.
lose all your money. You're going to blah, blah, blah. It's like literally written by ChatGPT. It says like, that's not coincidence. That's signal. It's like the totally the cadence of ChatGPT. And like someone literally sat down, there might be a digital dollar in the future. Write a terrifying, 10 slide Instagram post that's going to sell my course. And that's what it does. It's like, comment this. I mean, and, to be fair, we're on social media too. So sometimes we do the comment this for more information
Mm-hmm.
thing. But I don't want to like give this specific account and this specific post like any more information or any more notoriety, because I think that I don't even know their account. I don't know who they are. I don't know anything about them. But this
It didn't
account,
have
or
very
this
many likes.
Okay, well, this page says to me like this is AI, clickbait, scare tactics, trash, and I hate that stuff because it just serves to like grind on people's nerves and be like, "Oh my god, like is the digital sky falling? I'm gonna die," and then they get to like take advantage of that. I hate that. So that out of the way, this idea of a digital dollar 2.0 is real. And the actual formal name of this is the Central Bank Digital Currency, or CDBC. And as of today, it fully does not exist. And it's simply, my understanding is there are people inside of the government, the Fed, who are looking into this as maybe a potential option somewhere in the future. But for that to come into reality, there need to be like very large political legislative hurdles. And basically, you have to get all the Congress and presidents and everyone to agree. And we know how, we know how easy that is these days. And so, that's the premise, which is, this isn't about to happen and this may never happen. And so there's no reason to freak out over it or anything. But I still think it's really interesting. And so let's talk about it. So right now, there's currently two main ways you can hold money, like US currency. And Jen, do you have a guess as to what those two ways are? I know I'm like, maybe you can see it on the sheet, so you're cheating, but what's your guess?
I'm not. I don't be
Oh,
reading what you
good.
write.
I know.
Listen.
I love how you hate my trivia questions more than anything. But what are the two ways you think you can hold money right now? Like you personally, where's your money?
Okay, so I'm thinking cash in like a bank.
Yes. Well, that's the
Okay.
two right there.
Oh.
Yeah.
Wait, oh.
I mean, that's the two. And, there's other ways you can hold stuff, like in stocks and stuff. But this isn't about stocks. This is about cash. And so you can hold physical paper cash, like 10s and 20s. You fold up and put in your wallet, and you can touch with your hands. Or you can have money in a bank. That's like it's a digital.
Wow, I aced that test.
Yeah, you 100% aced. You didn't even know you got both answers right when you thought you just said one. But that's the way we can basically transact cash right now. It's either done through a bank or done through paper currency. And this essentially is suggesting, hey, maybe there's a third way we can do this, which in short is really crypto, is saying basically, hey, instead of the banks just maintaining your balance and keeping track themselves and being these organizations, you could have a physical, not a physical, you could have a personal digital wallet that isn't necessarily even controlled by a bank. And then the US government can issue this CBDC, the central bank digital currency, this US government sponsored crypto that has like a 1-to-1 dollar to dollar ratio, and send it directly to your account. Or you could take your wallet or your account and send it directly to your friend's account. And this is very different than current digital currency because it's not relying on the current banking technology, essentially. Bank technology is kind of servers and databases and backups and keeping track, and they have and if you lose your password, you call them and you go to them and get your statement. And banks basically are these very well regulated entities that keep track. This is saying, hey, what if you personally had your own wallet, and this new crypto technology is what keeps track, which is an interesting idea. And the reason it's interesting is because the banking technology is kind of outdated. If anyone has ever done an ACH transfer, which is how most payroll is done, how you would transfer money to, make payments on something person to person a little bit, it takes days. It's like this really, kind of very outdated technology that takes days to go through, and it has all these other kind of like 1970s eras quirks. wires exist, but wires are expensive, a hassle. They're potentially inaccessible to a lot of people. Actually, Jen, like how often or how many times have you sent or received a wire? Do you know?
I feel like I've only done wire when it's the only option. Like they're like, you have to do a wire transfer for this payment or something, which like what, like 5 times in my life?
5 times in your life? Can you think of
Yeah.
a specific time you've done it?
I can't. I'm like, why would I have done a wire? I don't know.
Okay.
No, I can't think of anything. What about you?
Yeah, I think I never did one until I like had significant money. And I think maybe one of the first wires I ever did was selling my first company when it was going to be like a lot of money. And when it's a
Hmm.
lot of money, I think people don't like these checks because checks have like are lost out there in the ecosystem for a while
Hmm.
and don't go through instantly. And so, and also this was a different time, checks are just becoming less and less common. But yeah, I think, wires often, I just sent a wire the other day. It charged me $20. I'm like, $20 to like, and so it definitely becomes totally inaccessible for anything less than like, you know, many thousands of dollars. At least if you're sending like $100, you lose 20, ruins the entire point. Um, Also, these things only operate during banking hours. Whenever I need to send a wire these days, I'm always looking at the clock. I'm like, okay, well, I'm in Pacific time, which means if I don't send it by like morning, there's no way it's going to happen that day. And so now I just have to wait for the bank. Right now I'm looking at the clock. It's 1:50 p.m. Like, there's no way if I
You
sent a
got
wire right now.
11 minutes.
Yeah, but there's no way because like they're like, oh, after 3 p.m. in New York, we don't
Yeah.
want to deal with it anymore. So we'll see you in the morning. So I'm like, okay, great.
Right.
And usually wires are big amounts of money too. So, um, and then so that's why wires are problematic. They're expensive and
Hmm.
inaccessible. And then there's the whole credit card system, which does like small transactions really well. But now there's like our Visa, MasterCard overlords that charge 3% per transaction to vendors and,
And
have all
interest
other
rate.
sorts, and interest rates to the customers. And it's like, why are those companies anointed as they get a piece of every single transaction in the world? And so, this digital dollar 2.0 or this central digital bank currency or this US crypto or whatever you call it. I hate the word crypto, by the way. It just like reeks of scam and crypto bros or whatever. But, that's kind
Yeah.
of the technology they're talking about here. It could mean positive things like instant settlement. Like I could send you $7 from my wallet to your wallet and you could get it instantly. 24/7 payments, no more waiting for the banks to be open. Lower transaction costs. Maybe it's like a fraction of a penny to do this based on how the, server technology works. Or maybe the government just covers it just like they, subsidize the post office. Maybe they cover the transactions for this CBDC. Um, and it could mean instant government payouts, things like Social Security, tax refunds, stimulus payments, instead of getting a check in the mail or waiting for your tax refund to come in or whatever. It could be 3M, the IRS processes it, boom, it's in your account. And so it's, to me as a technologist, as a software engineer, as a modern, child of the internet, those sorts of things are very attractive. That said, there's some concerns. Concerns are things like privacy. Right now, if I hold, like if I give you, Jen, $100, no one knows about it but me and you, right? And I think that like privacy advocates think that's how it should be. Like your money is your business. Whereas if I sent you $100 in this CBDC, central bank digital currency, now the government knows who sent who to what. And maybe privacy advocates don't want the bank being up in your business because maybe they don't, or not the bank, but the government, maybe they don't trust the government.
Hmm.
Um, because then they could say things like the government has direct control of the money. If the government controls this crypto, they could have it do stuff. Like, for example, they could say, all right, now there's spending limits. This is like, a little bit like 1984 Orwellian tinfoil hat, but it does point to a good concern, which is this makes things possible that wouldn't possibly be true for cash on the extreme other end of the spectrum, right? And banks are kind of this intermediate third party, which makes it harder for the government to do stuff like this. But they could say, hey, you can't spend more than X% of your money because we say so. Or we could say, hey, you can only buy certain things. You can't put your money there. Or they could say, hey, there's a restriction or there's an expiration on your your money, where if you haven't spent it in so long, we take it back, right? And we even talked about in a recent episode, like a wealth tax. This would certainly make wealth tax opponents be very, very nervous that the government could say, okay, we just passed a law that there's a 10% wealth tax, and before you even heard the news, we've taken it out of your wallet because we can do that.
Mm.
That is potentially true, right? And then another concern is that the whole banking system could be put at more risk. There might be less deposits at banks. Banks have less ability or control to do, lending and things like that. And so maybe everyone's hoarding their money in their digital wallet, and then they go to the bank and say, "Give me money for a house so I can buy a new house." And they say, "We don't have any money. It's not in our banks anymore. We can't do this whole lending thing we've been doing because we don't have the money anymore." And so those are kind of like the hypothetical risks I think that opponents or concerned parties are bringing up. And I think a lot of that speaks to how much political headwind something like this has. I think there's a trial of this that's going on in China right now, and China is not really a democracy, capitalist place like we are. They're more of like an authoritarian, communist type country, and so they can make things like this happen much more quickly if the centralized government just decides it's in the people's best interest, for better or for worse. But they're testing it right now, whereas I think in the U.S. would be much more slow to adopt. So that's what this whole thing is about. It's just this idea that it could happen. Frankly, I'm a huge proponent of modernizing the technology of the banking system. Like I mentioned, the whole ACH wire, credit card, this whole, checks with, if I send someone a check right now, they can just take my account number is printed on that. It's crazy. They can just take the account number and type it into another website and try to send money out of my account. And there's just this like series of band-aids that have been put on this crazy like public account number system that's been going on for 50 or 60 years now or longer. And so I'm all about modernizing that, but I admit those concerns are scary.
Wild. Okay. You really broke it down for us. Appreciate it.
Would you want digital currency, Jen?
No, thank you. I'm just going to keep my cash in a mattress as usual.
You're still, I mean, yeah, as long as cash still exists, the slippery slope arguments could be once the crypto thing exists, then they're going to start saying cash is no longer legal tender. And then we have no choice but to, abide by our government banking overlords. I think there might be some sort of hybrid solution where banks still exist and are the only way to access this thing to prevent a lot of those concerns I mentioned, but still get a lot of the benefits like the more instant transactions. So I don't know. We'll see.
I mean, I also feel like we're either going to get pushed into something where it's just more convenient to do it one way, or it'll be something like how we all tap to pay now because it's just like it's popularized, right? So you just less people are carrying cash, so you just people are slipping away from cards and now just tap to pay and all this stuff. So I feel like it's going to be one or the other. It's either going to be a legal thing where this is the new legal tender, or it's going to be everybody does it, so why don't you just buy an iPhone like everyone else,
Yeah. I mean, I think tap to pay would still work. It'd just be like, in Apple Wallet, instead of putting your Bank of America account, you'd put your digital wallet account or whatever.
Yeah.
But yeah, I don't know. It's interesting stuff, but I don't think you need to go. I guess I also didn't really say my takeaway, which is, as I say with like all these macroeconomic terrifying headlines, like you don't need to really do anything here. This post I really don't like implies, if only in 1740, when the French got rid of their franc, you would have made some clever moves, and you could be a French 1700s millionaire. They say stuff like that, implying that if you do something now about this, you're going to make a lot of money, or you avoid losing a lot of money, or whatever's the scariest thing they can do to elicit you to click in and buy their course or something. But I don't think that's true. I don't think there's really any action item here. I think focus on your lane, spend less, earn more, invest early and often. If digital currency changes how we make bank transfers one of these years, that's probably not going to be how you get rich. Like if we could go back to 2010, I could tell you to buy Bitcoin at 6 cents a coin, That's how you could have gotten rich, but we didn't know that back then. So we just, we do the best we can.
Period.
Yeah.
Let's move on to money. Can I ask a dumb one?
This is one of the smartest dumb questions, or the dumbest smart question. No, I think it's the smartest dumb question because it sounds like a dumb question, but I love this question because you're asking a really smart question to a dumb person. So what is the question?
Okay, Monica in Albany, New York asks, my dumb question. How does one pay taxes on the growth of investments in a standard brokerage account? Only when something is sold, or on the growth every year, even if nothing has been sold and no money withdrawn?
I love this question because it's so honest, and, you know, tootin' flutin' finance influencers like me be like, I'm a tootin' this is an unrealized capital gain and blah, blah, blah. And I use all this like, you know, it's a taxable account, so you're going to pay tax on the growth. And, you know, we can tend to use all this fancy, you know, what's the word for fancy talk?
Jargon? I don't know.
Jargon. Yeah, exactly. You can tend to use, like, just fall into this jargon world. And I really hate jargon because I think the use of jargon is like a crutch against really understanding the simplicity of what's going on. And if you can make it simple, then I think it shows better understanding. And so relying on jargon, I don't like.
Okay.
Thank you for that jargon assist.
How many times are you going to say that word?
Well, now I'm saying jargon from now on, so I never forget it again. And plus, it starts with a J, like my name, Jeremy.
To lose meaning.
Jargon, Jeremy. Yeah.
Jargon,
it sounds like jargon. Do you ever do that where you like write a word like 20 times in a row, and then you're like, what is this crazy series of symbols in front of me? That can't be the way you spell this word. Jargon. It looks like dragon to me now.
It's starting to feel like dragon.
Okay. So that'd be cool. Dragon. We should really talk about more dragon terminology and less jargon terminology. Now they sound the same to me.
What's dragon terminology?
You know, like fire breathing and talons and Dungeons and Dragons.
Game of Thrones.
I don't know. Yeah, exactly. Game of Thrones. Oh, I should have said the cool. You said the cool reference. I said the nerdy reference.
Yeah, you sure did.
Yeah, that's what I meant. Game of Thrones. People have sex in Game of Thrones.
Wow. Now we have to flag this video.
Flagged. We talked ahead of time about how our videos keep needing to be self-reported as
I don't think we
not
realize
for
how much
kids.
we cuss.
Okay.
My mom would be ashamed.
Anyway, this question was, what about dragons? No.
Yep.
How are taxable brokerage accounts taxed? And I love this question because it's like such a simple question. And I think most people kind of don't really fully have a grasp on it. So here it is. I'm going to do my best job I can to make it simple. And taxable brokerage accounts are taxed in two ways. And this is very different from Roth IRA, 401k, TSP, HSA. All those accounts are tax advantage accounts that operate under a different set of rules. Let's ignore them for now because we're answering this question. And so if you have a taxable brokerage account, it's taxed in two different ways. One, on dividends. Dividends are money that is paid out throughout the year from the growth or profit of the companies, or when something inside the company is sold and paid out to the investors. It's basically these payments made just for holding an investment that's deposited as cash into your account. That's called a dividend, or a capital gain, dividends and capital gains that can be paid out to you. But basically these payments throughout the years. That's number one. And number two is realized gains and losses. That's when something goes up in value. Notably, I didn't say when you take money in or out of the account. And so when you put money in or take money out of the account, it doesn't matter. That is not a taxable event. That's not how you're taxed. It's just those two things. It's dividends and realized capital gains. So let's break it down. First of all, dividends. When you, let's say you hold a share of Apple stock and Apple pays a 25 cents per quarter dividend per share that you own. So if you own 4 shares, every 3 months, you're going to have $1 automatically deposited to your account. First of all, it doesn't matter if that dollar is reinvested. A lot of times people ask, what if I have the little checkbox for automatically reinvest turned on, where you take that dollar and buy more Apple stock, or you take that dollar and buy more index fund, whatever it is. These things all pay dividends. Index funds, ETFs, mutual funds, stocks, they all can, and most do pay dividends. And so if you reinvest, you take that cash payment and have your brokerage website automatically buy more doesn't matter. You still have to pay tax in that calendar year on all of the dividends. And so it doesn't matter if you reinvest. It doesn't matter if you take the money in or out of the account. All that matters is if those funds or those stocks pay out throughout the year, you have to pay tax on it that year. How does the government know? Well, the government gives you a tax form called 1099 Div, which stands for dividends. And actually, this right here is my 1099 Div form from 2025 because tax day was yesterday. So you can see on my form 1099 Div 1A, the very first number there, it says total ordinary dividends. That's the total number of dividends that I was paid out throughout the year from all my investments. And so in my case, it was $58,000, which by the way is incredible news for me because just for doing absolutely nothing, you talk about passive income, there's very little passive income except for what we're looking at. I got $58,000 of cash deposited to my taxable investment account because of those dividends internally paid. That second line there is worth noting because it says qualified dividends. That second line is a subset of the first one. So the first one is all dividends. It says ordinary, but should just say total dividends. And then the second one is qualified dividends, which means these are dividends that for some reason qualify for preferential tax treatment, which is basically long-term capital gains. And so we're getting kind of into the weeds here, but just again, big picture, investments make money two different ways, paying out dividends and going up in value, and you're taxed on both of those ways in investment accounts and taxable accounts. One, the dividends through Form 1099 Div, and it shows you how much you make right there, and the tax rate depends on if they're qualified or not. That's it. And then the other way is capital gains. And so capital gains is when you buy something and sell something for more than you bought it for. And so, for example, if I buy a bar of gold for $1,000 and then sell it for $3,000, I had a capital gain of $2,000. And technically, unless I'm like doing this on the, backroom deal on the, untracked market, I should report that to the government and say, hey, I bought something for $1,000 and sold it for $3,000. Therefore, I owe capital gains tax on $2,000 of gains. And so you only owe tax on the gains when you realize the gains. That word realize, all it means is you basically lock in your gain or your loss in the case of a negative gain. And so, for example, if I, again, buy a bar of gold and I buy it for $1,000, then I'm walking around the market and someone says, hey, I see you have a bar of gold. I'll pay you $4,000 for it. And I say, nah, I'm good. I'm going to keep holding it. I didn't realize that gain. All I have is a bar of gold that someone said they'd pay $4,000 for, but I don't actually have the $4,000 in cash. So I owe zero tax on that, even though it's appreciated in value by all accounts. It's worth $4,000 now. I don't owe tax on it. But then the second I say, okay, here's the gold, give me the $4,000, that means it's realized. That means I now have the cash. That means that year, the year in which I sell it, I have to pay tax on that realized gain of, in this example, now $3,000. Okay? How does the government know, and how do you know how many gains you've realized? Well, again, your brokerage website gives you a tax form at the end of the year. It's called 1099-B. I think the B might stand for brokerage or barter exchange transactions. That's what mine says. And you can see my 1099-B right here. And actually, I had to go back to 2024 because in 2025, I didn't sell anything. How great. I was somehow able to live off of my dividends and my income. And so I didn't sell anything in 2025. I just let all my investments roll the whole year. My 1099-B in 2025 was all zeros. But that doesn't make a very good example for a show. So here's my 2024 in which I bought a house. And so I needed some money. And so you can see here, for example, it lists every single sale on its own row. And so there's a sale there where I sold $30,000 worth of FSRNX. So I had a ticker symbol FSRNX. I had $30,000. The second column that says cost or basis, which is $24,778. And then the next column that's filled out says the gain, it says $5,221. And so that right there is my realized gain. And so the government says, hey, based on that sale there, you owe tax on a $5,000 gain. And then you can see the rest of them down there. And so the total is down at the bottom. For all of 2024, I sold $154,000 worth of investments. My basis, that's what I paid for it, was $127,000. And so my total gain was $32,000. And then even down at the bottom there says box D, long-term realized gain, long-term realized loss. I gained $32,000 and I lost $5,000. And so my net of that was actually $27,000, not $32,000. Actually, that $32,000 was the wrong number because your losses offset your gains. I know this is the portion of the show where I'm screaming numbers into a microphone, which apologies if you lose interest. I'm doing my best. But again, big picture. Investments make money in two ways: dividends paid out throughout the year and realized gains when you sell something for a profit or a loss. And then you get two tax forms to match those two ways, a 1099 div and a 1099B, which is for capital gains. It's worth noting capital gains also are broken down into two different buckets. Short-term capital gains, which means you held the thing for less than a year. So for example, if I am day trading NVIDIA stock and I buy it today and I sell it tomorrow, the government's going to say, hey, if you had a gain on that, we're going to tax you as though it's income, ordinary income rates, which is a higher tax rate. Whereas if you hold it for at least a year, we're going to tax you at the long-term capital gains rate, which is lower. And so generally, you get better tax treatment if you hold things for longer. And you can see on my form here, I didn't sell anything with short-term capital gains. I rarely make transactions. I just hold my investments forever. And when I do sell, I'm selling under the more preferential tax rate of long-term gains. And so if you blacked out during this whole boring tax talk thing, welcome to the April 16th episode, apologies. And you just want to know what's the bottom line here. The bottom line is, how are taxable brokerage accounts taxed? Well, they give you tax forms at the end of the year, two tax forms. And, and my brokerage account actually gives me one single PDF that they call a combined tax form, which with a 1099 div and the 1099B, and maybe even some other ones like a 1099 INT, which is like bank interest, which is reported slightly differently than dividends because it's interest from a bank, not dividends from a company. But all this stuff is just numbers you type into your tax software. And so it's going to say, do you have any tax forms report? You have a 1099B, great, type the numbers in. You have a 1099 div, great, type the numbers in. And then it just works it out. Your tax software, or if you have a tax preparer, you probably send them a bunch of PDFs or upload them to their tax preparation website. And that's it. That's how it's taxed. And so, the important notes are, it doesn't matter going in or out of the account. The things that matter are, were dividends paid out this calendar year? Always taxed this calendar year. And then, did you realize any gains by selling? Then if so, taxed on that long or short-term capital gains.
Monica. I
have left Jen speechless.
You thought that your cute little question was going to have a short and sweet answer, but guess what? Jeremy, not to skip ahead, but Jeremy had time today.
I think I broke down 6,000 pages of tax code in 5 minutes of ranting.
That was
not bad.
A lot for basically, you don't need to do nothing. You're going to get a W-2, basically the same thing you would get at the end of the year from any other job. W-2, 1099, 1099 div, 1099B. Don't do anything except what you normally would do. You're just going to get the forms. You're going to give them to your tax person or H&R Block. And that's it. That's 100%. My show would be 5 minutes long if it was just me.
100%. But I will say, the caveat is, it's good to understand when you're taxed, because sometimes you'll sell something at a huge gain and be like, oh, I didn't realize that was going to show up on that tax form, right? Where W-2 income, you kind of know what you're signing up for. You're like, oh, they're going to tax me on my payroll I got this year. But if you sell something at a gain or sell something at a loss, in fact, on my 1099B, you can see here, when I was selling all these things at a gain, I decided to purposely sell my Lyft stock. I randomly bought Lyft stock one day on a whim that went way down. I was like, I think I'll realize that loss to offset some of my gains. I'll save myself a couple $1,000 on taxes by lowering my total gain for the year by, selling one of my losers, basically harvesting those losses, right? That's what they mean when you hear tax loss harvesting. You sell something at a loss to basically have it show up on this 1099B to lower your taxes. And so, for sure, depending on where you are in your journey, Jen's takeaway is fully valid. nothing crazy here. Just type in the tax form like you do with everything else. If you're like, okay, numbers are getting bigger, I'm making some moves, it's, probably time to start looking at, when you get taxed on these things, so you're not, signing yourself up for an unexpected tax bill.
I mess with you. They were here for the nitty gritty. We're here to know why,
I agree.
An
But we need
informed
to tell
personal
more
finance
jokes
club
too.
listener is better. Okay. Can we move on? Is that okay?
Yeah, we can move
Do you have
on. I
more to say to
mean,
Monica?
we better. I think it's time we get one of those long hooks from like the 1920s, theater, and you just put it
Yeah,
around my
we're
neck
like
and be like,
Showtime at the
"Oh,
Apollo, and you're getting booed
yeah,
off right now.
he got into non-qualified dividends. You better get the hook. Get the hook."
Boo.
Yeah,
Okay. Let's move on to Scroll Patrol.
Scroll Patrol.
All right, you guys know the deal. I found a video from the internet. Jeremy has not seen it. He's gonna react in real time and give it a score. Did you give a score last week?
I did.
Yes,
It
you
was an
did.
A
You did. Okay,
minus.
okay.
Come
Oh, you
on.
were okay.
You're gonna have to go
I just
listen to
had that
figure out
thought.
why it's A minus.
Okay.
I wouldn't forget the score. Passing judgment on people from a place of absolutely no perspective to do so is like my favorite thing.
Period. Okay, so we're both gonna click on this video, and then Jeremy's gonna tell us what he thinks.
My sister and I spent $60,000 on a Disney Vacation Club timeshare. And what this gets us is a 2-bedroom villa for just over a week every single year for the next 45 years. I'm certainly not saving money in the first year, or the second year, or the third year, or the fourth year, but by the 15th year, the 20th year, we're gonna end up actually saving a ton of money versus just paying the cash price.
And we haven't talked about timeshares yet, have we?
Oh, was my groan audible?
Have we?
I don't think we've ever talked about timeshares, not in the podcast.
I can't believe
I've
there's
definitely
a
mentioned
topic
them.
we haven't covered yet. I'm so excited.
What are we out? We're 31 episodes in. When we get to episode 1,000, we can talk about how we've got nothing left to talk about. Cool. So that was just like an endorsement for a Disney timeshare. I mean, the mention of the word Disney in there gives me great pause, because I feel like there's going to be some Disney adults who have me murdered if I speak ill of any sort of spending on Disney. And, that aside, let's put the Disney thing mostly aside. Maybe I'll...
Well, then you'll have more comments for Jeremy Had Time Today, because, they're kind of going
right.
dry. So at least you'll
All right,
light
Disney
up the comment
adults.
section.
If you had your wedding at Disney, then...
it's going to be just as bad as the Christmas post where you're like, don't buy a real Christmas tree, and the Christmas hive comes out strong.
Oh my God. Literally every single topic, someone like that's the most important topic in the world. And they're like, how dare you, man?
That's not even touching Disney adults.
Yeah, exactly. All right. So let's put the Disney thing aside for a second. And she's basically saying, I don't know who this creator is, by the way. It looks like it was reposted by...
No, yeah,
Graham.
It's not. Whatever's in the bottom is not her, because somebody reacted to it, but I was like, I don't want you to do a reaction to a reaction, so I cut his part out. Yeah.
Okay. I know that guy, but I don't know this this other creator. But yeah, so it's saying, hey, if I'm going to go, since Disney vacations are so much money, I can put all this up front and then I'll be saving over time. I really hate that perspective, and I'll tell you why. Because it assumes so much about future spending, right? And, I think that's kind of like by the way, I guess maybe I should give some baseline of what a timeshare is. A timeshare, back in the day, the idea kind of started a little bit altruistically, which is, hey, I want to go buy a vacation home, but the nature of vacation homes is I only really use them a couple weeks a year. And so instead of buying a whole vacation home and having, 50 weeks a year that it goes empty, I could maybe go in on it with 26 other people. I get, I get it at maybe 1/26 the cost, plus maybe some management fees and stuff like that for cleaners between our families sharing it. And then I get all the benefits of being an owner, in terms of maybe I can sell my share one day. And, that theory kind of really makes nice sense, because you've got some ownership in real estate. You get to use your vacation home like you wanted to. You get in for like a dramatically cheaper price than buying an entire property. And that idea has kind of morphed over time into these like vacation companies where you're not buying a specific small property anymore. You're like buying points in their system that have conversion values and merge over time, and all these like legalese around how you can transfer them. And they claim you're still a deeded property owner, but you're really not. And the bottom line is, owning a timeshare is owning a toxic asset. You can't get rid of a timeshare, and timeshares almost always come with huge annual maintenance fees. And she didn't mention that at all. I mean, maybe the subtext was there that, when I'm, paying the huge annual maintenance fee, eventually I'll come out ahead. But what really happens is people buy a timeshare and then they're on the hook for like $1,500 a year. And they're like, well, the renting this 3-bedroom in Hawaii would have cost $3,000, so $1,500 is a screaming deal. But then one year they don't want to go to Hawaii and they don't want to go on a vacation at all, or they use their vacation time doing something else where there was no timeshare, yada yada yada, and now they're out to $1,500. Or their kids don't want it, and now they can't get rid of it. And there's literally companies dedicated to getting people out of timeshare deals where they'll go and try to like sue the timeshare company for, there's literally like multiple companies where you pay them not to sell your portion and get some money back. You pay them just to get out of it for free, just to like throw it away. Right.
Have you ever been through a timeshare presentation?
Yes, I have.
To get something free?
When I was, I guess I was to get something free. I think I've been through 2. Have you ever been through a timeshare presentation?
Let me tell you something right now. The first time I went to Disney World, I was 18. We didn't go till we were older. My mom took me and my younger brother. We had to go to a timeshare presentation in order to get free tickets. Oh. So I don't know why we took Isaac, because at that time he was 11. And they were like, I don't know why this was a rule, but as a rule, you couldn't be married. My dad didn't come with us. It was like me, my aunt, my mom, and my younger brother. And they were like, we got through this whole like 3-hour presentation. And they're like, we just want to make sure this is true. And also you're not married. And my mom's like, yep. And Isaac goes, what about dad, mom? And then we had to do the whole thing the next day to get into Disney.
Oh no.
She was so mad at him, but he was so young, so she couldn't get mad. But he was like, why would you lie? Like, what about dad? He's at home. So she had to go the next day. She's like, I'm just going to go alone. We'll go to Disney tomorrow. It was so bad. We were like,
I know exactly why they asked that, because they know you're not going to make that financial transaction without the spouse there. And they know if you're lying about it, like your mom was, that you have no intention to actually buy it. And so they don't want to give you the freebie without, and your brother, I love that from your brother, because he's just, he
was just an innocent, sweet little baby.
Yeah, exactly. Oh, Dad.
We were like, oh, Isaac, why?
Yeah.
That's always I've ever been to a timeshare, but I'm traumatized now. I'll never do it again, even for something free. It was so awful, because they really are trying. By the end, they're like almost cornering you. It's so predatorial, and they're like almost won't let you leave without. And my mom was never like, listen, one thing about Alice, she's not gonna get the timeshare. She don't care what you say. She's there for the free stuff. Yeah. But like, she was never gonna get it. But like, they really do start applying pressure in like kind of a scary way.
Yeah, it is crazy that like we live in 2026 where everything's Amazon, DoorDash, like no pressure, transparent, but still if you sit down at a timeshare, it's like you get a table, you get a the numbers in front of you, can't leave, and it feels like, oh, but it's a $36,000 opportunity, but we're going to give it to you today for $12,000. But if you walk out that door, you're like, come on, and there's just like there's so many crazy high pressure tactics being used. By the time your head is like in this tizzy, you're like, am I crazy not to? It's only $12,000. Am I crazy not to spend 12? I'm like, no, that's $12,000. Right. That's still real money. Don't do it. Yeah, and so I'm, spoiler alert if you haven't picked up on the way this convo is going yet, I'm very anti-timeshare. I think that, it's just this predatory business that ropes people into these deals. And, while her math may be technically true, you're like, okay, if I do this each and every year this week, and all these things end up being true, there's a huge missing component there, which is flexibility. Like maybe in year number 3, Disney's running a huge sale, and so you get in for even cheaper without having it. Or maybe in year number 4, you don't want to go to Disney and you go somewhere else. And maybe in year, maybe year number 5, you travel to Southeast Asia where lodging is, $10 a night, and you can't use a timeshare there. And, money, and there's also the time value of money where maybe that's $60,000 rather than rotting in a, timeshare could be spent growing an investment. And so I'm very anti-timeshare. I mean, I think some people have made an argument that's like a much more social argument, which is some people never leave their house. If they buy a timeshare, then it forces them to at least go on a vacation per year, which I'm like, okay, that's true. But I kind of think that's like, there's other ways to achieve that without being this horrible financial decision. And so, I feel kind of bad giving a grade to this nice looking person here who just wants to go to Disney, just wants to be a Disney adult and have her
God
boyfriend
bless.
propose to her in front of the Disney princess castle or whatever. And then they can have,
I don't know what goes on there.
can you have a Disney wedding? I'm sure you can.
Oh
right?
my God. I want to know how much that would cost. I'm sure you can do it, but wow, the price.
Yeah. I'm looking at this like hotel room there, and it's like, it looks like a very basic hotel room with 2 queens and a dresser, and I'm like, $60,000. That's a lot of money. So I give this a D. I don't.
Brutal.
Don't buy a timeshare. It's like one of my least favorite ways to spend money. It's slightly better than joining an MLM, I think, but I just don't like all these predatory businesses trying to take your money. Keep your money for you, invest it for you. Don't put it into these other companies trying to suck it out of you. That's what I say.
I agree. And I have personal firsthand experience on the predatory behavior. I mean, there's salespeople, so they're just getting commission. So it's just like any other sales position, but it is spooky.
Yeah. No, I have gone to 2 timeshare presentations myself. One was with my dad, who owns a few, and he
owns timeshares?
Yeah, he owns timeshares. My dad and I have some similarities and some differences. I think he offered them to me before at least once, and I didn't happen again because it just got shut down so fast.
You guys,
he's like, no, I'll just give it to you. I was like, oh, I understand. I do not want it.
Right.
But I just think he just likes the negotiation. He's like, ooh, maybe I can get it down from 12,000 to 10,000 or whatever. I'm like, Dad, they would be thrilled to sell this to you for 10,000 because they make their money in the maintenance fees or whatever. And then the other one I went with a bunch of, I think it might have been in my 30s, but mostly with 20 somethings. And we went on like New Year's Eve, and they were like short salespeople because it was over the holidays. And, they had to sit down, and I was like bracing. And then they're like, oh, we're kind of short salespeople. Like, give us 5 minutes. And then he kind of like, what's it called when you profile
when you said
someone?
Short salespeople, I was like, why is he on their height? Like, what is
they had too few salespeople who were all of normal stature.
I get it, you're tall.
Yeah, I know. I lorded over these short salespeople and said, you think I'm going to buy you? I am 6'4". I don't think I mentioned that enough on the podcast, how tall I am.
5'2", so I'm taking this personally once again.
I forgot how short you are. We've been together
I got big
in person.
Energy. I got tall energy.
100% true. And I have weakling energy, so we're opposite. But yeah, he profiled us and saw we were a bunch of New Year's Eve 20-somethings. Right. He's like, here's your tickets. Leave. We're like,
yes, that's
done.
Ideal. That's my dream. Oh my gosh.
He was actually pretty cool. He's like, I know the situation here. He's like, I get that, some people are here for the freebies, and that's like what we're advertising. And so that's, and you're not going to actually, but if your dad comes here who we can trick into getting into a negotiation again, then
what were the tickets for? Where were you guys trying to go?
I don't know, like skiing or something. They might have been lift tickets or something.
Oh, so it wasn't something happening right then. It was like for a future trip.
Yeah.
Okay, gotcha.
Or,
you said New Year's Eve.
Well, I think we went skiing in early January or something with the lift tickets, something like that. I don't know.
Nice.
I remember very little. All right.
Very
anyway,
cool.
Let's stop talking about timeshares. I'm already getting nauseated.
Fair enough. Let's go on to our last segment. Jeremy had time today.
We're in the comments.
We are in the comments.
Starting a good old-fashioned flame war. And what is this post?
I'm back on Instagram. I'm back home. At the beginning of the year, you posted annual contribution limits for tax advantage accounts titled Max Out for 2026. Do you want to tell us what you're seeing in this little chart here?
Yeah, it's just a table that says like IRA, 401k, HSA along the left, and on the top it says annual limit, monthly, and biweekly. And it's basically just a little table to help you figure out how much you need to invest. So, for example, if you want to max out your IRA, do the maximum you're allowed to contribute to it, that would be $625 per month. And if you want to max out your 401k, that would be $2,041 per month. And so for people in January who are able and willing and interested in trying to take full advantage of the government limit of how much they can put into these tax advantage accounts, that's what it breaks down to, either bi-month or bi-weekly, which is how a lot of people get their paychecks. And then this commenter said,
the average person can't max these and save to buy a house, period.
Period.
They didn't say period. That's just the punctuation.
They did just, yeah, that's right. It just
which I feel like makes it very harsh. Like a period. Oh my gosh, relax.
Are we to that level of internet grammar culture where a period is some sort of microaggression?
Texting like my mom. Like, get out of here.
Oh my God. Capitalizing all the words and using a
I'm
semicolon.
an elder millennial, so I capitalize, but I don't put periods at the end of my sentences mostly. That's too much.
I don't know if I do. I think I do, because you can just press space twice. I don't know. Maybe I'm.
You
maybe
do.
I'm
looking at our text right now. Oh my god.
See, okay. See, it's all they're all microaggressions against you, Jen. So,
and I'm always so upset with you. So that makes sense.
You can talk to our HR department, which I think is you. So
yeah, I think it's me.
Good luck.
Awesome.
There's two of us. I'm the HR assistant.
You work for me.
All right, I know it's the snake eating its own tail of org charts.
Yep. Welcome to PFC.
All right. Okay, so this person says, "Hey, the average person can't max these to say and save to buy a house." I mean, to me, I'm like, okay. First of all, I didn't say no one talking about buying a house in this post. I'm just saying what the limits are, and to be. What'd you say?
I said they're coming for your neck.
Oh yeah, they're coming for my neck. I'm like, am I doing something weird with my neck? Am I doing a double chin again? Okay, but yeah, my general response is like, yeah, you're right. You're almost certainly right. Let's break it down. So the median U.S. household income, they said average. I'm saying median. Average isn't really a fair stat because it's skewed by super high income people. But the median U.S. household income right now is $83,000. If you and your spouse both make $40,000 or so, then you're $80,000. If you live alone and make $80,000, then you're at $80,000. If you have a teenager who makes $10,000, you make $70,000, you make $80,000, right? That's household income. And then, like, let's say you max of that $83,000. Let's say you max every single account, your IRA, your 401k, and your HSA. That would leave you with $42,980 per year. That's a lot less. That's like about half, right? And then, like this commenter says, you try to save for a house. Let's say you save $1,000 a month for a down payment for a house. That might get you to a down payment in some states in a few years. That would leave you with $30,980. $30,000 is a little bit less than the poverty line in the U.S. for a family, $33,000 for a family and about $16,000 for an individual. And so, in this extreme straw man's argument, if you make the median income and you max out every single account and save $1,000 for a month, you're remaining, and this isn't even talking about taxes, by the way, but you're remaining, and maybe taxes isn't even counted here because IRA, 401k, HSA, those could all be tax-free accounts, but your remaining pre-tax income would be around $30,000. So I'd say, yeah, that's not in the world of realism. I'm not going to say you should be doing this, and you can gladly save $1,000 a month and all that. Of course not. So I have two main arguments to make here. One is this comment he's making is essentially what I'd say a straw man's argument. No one is saying a median income person should be doing the maximum. Those are kind of different. Like maybe the median person should be doing the median, or what should they be doing? So, and also it's not all or nothing. While this post is just a helpful divide the numbers, if you are someone who can max out your accounts, it doesn't mean you have to. And if you don't, doing anything is good.
It's literally the maximum that you
the
can
minimum would
do.
be 0, and the second minimum would be 1 cent, and the third least would be 2 cents. And so, just to put some numbers to it, let's say you do the maximum. The maximum is about $3,400 a month. If you add up all those numbers, it's $3,400 a month. If you invest that and get a 7% rate of return, which is about the after inflation real return of the stock market over the last 100 years, that would give you in 40 years $8.1 million. So if you max out these accounts, you wouldn't just be okay. You would be like uber wealthy, not like billionaire wealthy, but you'd be, around the 1%, the, top 1% of all people or all Americans. And so, implying that, hey, a median income earner of $80,000 should end up with $8.1 million, that's not very realistic.
Right.
A little bit less crazy. Let's say instead of, like I said, you don't have to max it out. Instead of doing $3,400 a month, you just do $1,000 a month. That's more realistic. That's like a reasonable percentage of your income. That would leave you with $2.4 million at retirement in 40 years. And that puts you in the 93rd percentile of wealth in the US. So if you can put away $1,000 a month at 7% rate of return for 40 years, that would get you to $2.4 million. A lot of people are saying, well, I don't have 40 years or this and that. These are just numbers. Maybe if you don't have 40 years, you're not starting at 0. Maybe you already have some. And this is also across all accounts. Maybe you've been doing a 401k already for a while. Maybe you've already paid off your student loans and you can invest more after that. These are just numbers. It's not your specific situation, right? So it just goes to show, even if you're not doing the maximum, even doing a reasonable amount of money can take a median income, 50th percentile income, and get you into the 93rd percentile of wealth, because most medium income people aren't putting away the $1,000 a month across all their accounts. They're doing less. So that's point one, is it's not all or nothing. And even a reasonable amount can make you very, very wealthy if done over time. And then point number 2 I'll make is, I'd say the goal is not to be median. You're sitting here driving on the highway, listening to the Personal Finance Club show. I don't think your goal is to be median. I think the goal is to do better, right? And, if you were making $83,730 right now, like, how about a raise, And I think a lot of people tend to do better throughout the course of their career. And so maybe as you get raises and you get into that 100,000 range or above, you don't spend the entire amount of your raise. You spend part of your raise now and save part of your raise later. And so if you feel a little bit behind now because you haven't been doing $1,000 a month for 40 years, that's okay, because as your career progresses and as you go beyond the median income, you can start doing more. That's kind of the nature of our capitalist society, which is, everyone doesn't get the same. If you make more and spend less and direct more of your money towards investments, you can have more. It's all really choose your own adventure. And all that to say, maybe I should have said this at the top, that's not to mitigate the reality of, the vast number of people's situation, which is, it's really hard to buy a house today and save a lot of money today. Like, it's hard out there. Homes relative to income are more expensive than they used to be, a lot more expensive. Income is, kind of keeping up with inflation, but not keeping up with the cost of housing. And so, it's definitely tough out there, but you can say, this isn't fair. The boomers had it great. They could buy a Silicon Valley, duplex in the 60s for $5 and a, goat. And now that same duplex is, $30 million. That's crazy, but still, we live in today. And so you do what you can today. You live below your means, you invest early and often, grow your income, spend less, invest more. That's going to result in a better outcome, not saying it's not possible to do the max, so I'll do nothing. That's not going to do it. And by the way, like I said, this person is technically correct. You can't do those things without basically putting yourself at the poverty line. So I wouldn't, but I would do something.
Wow. Spoiler alert, you already gave the rules.
Oh man, people that know the rules.
Maybe it's the first time listening.
If you are this far into episode 31 of the Personal Finance Club show, welcome. We have rules and we're very strict here. It's a cult and everyone must follow the rules or you get excommunicated and demerit. Or what do people do in cults?
Never been part of one. Can't say.
But maybe people are part of one and they don't know it. I can't think of any current examples.
I guess I'm part of this cult, so.
And we have a strict series of demerits, which essentially result in excommunication. Is that the word, excommunication?
That feels right. That feels good.
It sounds too much like communication to me. I'm looking it up.
What happens when you get kicked out of a cult? Is that what you're Googling right now?
I'm just Googling excommunication.
That feels right.
Oh, yeah.
Because I feel like once you leave a cult, you can't come back.
Yeah. I think maybe it's a little bit more.
Let you leave. It's really what's probably going to happen.
Right, yeah. What's
it's more like, if we're going to kill you or like lock you up.
Yeah, pro-communication, that means you're like more in the cult now?
You're just like more indoctrinated.
Yeah. It never occurred to me the word communication is built right in there. Well, who are we communicating with? I don't know.
We're not going to get into, what is it called? The study of language, entomology? Is that?
Now you're using words I don't know. I'm in the sciences,
No,
Jen.
I feel like it's the wrong word.
These word science, these word arts mean nothing to me.
Well, you're more of a numbers guy, huh?
Exactly.
Okay,
entomology.
Is that right?
Entomology, the branch of zoology concerned with the study of insects. Pretty close.
No.
Isn't it like etymology? Yeah. Etymology, there's no one there. Is the study of origin of words.
Okay. Etymology?
Etymology. All right. Now everyone knows. But what you should really know is how to build wealth, and this is how you do it. You follow the 2 rules of Personal Finance Club. Rule number 1, live below your means, and rule number 2, invest early and often. See you next week.
The Personal Finance Club show is produced by Jeremy Schneider and Jen Mundia. Music by Esabalu and Homie. Send your questions to podcast@personalfinanceclub.com. The Personal Finance Club show is co-hosted by Jeremy Schneider, who is a co-owner of Nectarine, an SEC-registered investment advisor. The views expressed on this show are those of the hosts and guests and do not necessarily reflect the views of Nectarine. Please refer to hellonectarine.com for all relevant disclosures. This podcast is for informational and educational purposes only and should not be construed as personalized investment advice or a solicitation to buy or sell any security. Listeners should consult their own financial, legal, or tax professionals for advice specific to their situation.